All right, all right, all right. We are live talking all things VA loans. I'm honored to have my buddy Patton Gade, #1 VA loan originator in the country, according to Scotsman Guide from last year, right? Is that the case, Patton?
Well, number 2 on this Scotsman Guide that just came out.
Oh, okay. #1 and #2. Either way, doing a lot of VA loans. And as a West Point grad, I think you take a lot of pride in serving fellow veterans. So I'm excited today more than anything else just to have a conversation around VA loans. There's plenty of myths around VA loans. There's misinformation. You know, people think that the VA writes the loans, or they think that somebody has a name that has veteran in it, that they're the go-to place for VA loans. So first and foremost, thanks for joining me. Maybe we start with who the heck are you and what qualifies you to give us information about VA loans today?
You know what? So, I mean, obviously my name's Patton, and I've been doing loans now for almost 10 years. Came into this in 2014. So it's been a minute. Pretty early on, I realized that the people I connected with the most were the people I've really spent my whole life around. That's veterans and their families. And so, you know, because of that connection, you know, I really started digging deep into VA loans. One of the things I did early on, I actually pulled my own certificate of eligibility because I didn't know really anything about VA loans, but I'd purchased several homes when I was in the Army and after I had just gotten out. And I realized I had used my VA loan benefits and I didn't even know it. And that just keyed in my head, like, wait a minute, here I am doing this and I'm teaching VA loans to people and I'm helping people do VA loans, but I used a VA loan. I didn't even know it. And so I realized that there's this education gap out there. And then you talk to veterans, they have no idea what's going on a lot of times. And you talk to realtors that should know what a VA loan's all about, and they don't know what's going on. And they, you know, all the myths and the old wives' tales from years ago. And then, you know, you talk to other loan officers, and frankly, there just aren't that many people that are really great at VA loans. And so I realized it was a big gap in this marketplace. And so I really leaned in on that and focused on it, primarily because for the love of my fellow veteran and just the people I've spent my life around, you know, just a desire to help them and serve them in the best way possible.
Yeah, I love it. And I think too, you know, when you talk about it, there's some of that across all loans, right? There's just, you know, financial literacy is not something that's taught in school. So, you know, all Americans to a certain degree just have a lack of knowledge when it comes to the basics of how it works. And, you know, you happen to focus in on the veteran community, which I saw a stat recently, Patton, that kind of blew my mind. I don't know if it was 13% or 16% of veterans have actually used that benefit, which is a phenomenal benefit. The VA loan, know what I know about mortgage loans as a whole, is a great
best loan ever.
Best loan ever. Have you seen that stat? Is it 13%?
Yeah, that's about right. And I'm not sure exactly where I've seen that circulating. And I think that's about right. I know it was in the low. Last time I looked up stats based on some VA stuff was somewhere in the low double digits. So somewhere between 11 and 15%. And I think 13 is about right. That's been my estimation over the years as well. I mean, it's sad because most people, I mean, the VA loan, like we just said, it's the best loan product on the planet. It has the lowest rates generally. Yes, if you don't have VA disability or a Purple Heart, you have to pay the VA funding fee. But with that, you get a lot of benefits like the lower rate, no PMI. It's a super easy loan if and when rates do drop. It's a very, very easy, cheap, and fast loan to refinance into that lower rate. And so there's just a lot of things about it that make it the best. And, you know, the zero down, obviously, just make it a fantastic loan product for just anybody that qualifies. It's probably your best loan.
Yeah. And so that's where I'd love to start because, you know, being a numbers nerd like I am, whether it's 13 or 16%, that means that 5 out of every 6 veterans have not used this great benefit, which is the VA loan. And being a fan of home ownership and creating wealth, I know, you know, all the great benefits of having a home. So for the audience, for anybody who's listening, where do you start? If you're a veteran and you say, I don't know anything about VA loans, how do I know if I qualify? And maybe we'll start with that. Like, what are the qualifications for, time served, or how do you figure that stuff out?
Sure. So the first thing with that is if you currently serve on active duty, once you're done with basic training and AIT, we called it in the Army. I don't know if they still even call it that, honestly, but once you get to your first unit and you've been to your first unit for 90 days, now you qualify for a VA loan. You could have only been in the military now, less than a year, and you're going to qualify to use a VA loan to purchase a home. If you've served active duty and then got out, you have to have served at least 2 years of active duty in order to be eligible for a VA loan. If you did that 2 years, you're going to be eligible now for the rest of your life. In addition to that, you can't have a dishonorable discharge or a bad conduct discharge, but there's honorable, and then there are, some steps down. As long as you didn't get to the bottom steps, the dishonorable and bad conduct stuff, you'll still be eligible as long as you served on active duty. Now, if you were in the Guard or the Reserves, as long as you've spent 6 years in the Guard or Reserves, then you're eligible for a VA loan. If you've gotten out, you have to have had an honorable discharge from the National Guard or the Reserves. And then the other thing is, while you're in the Guard or Reserves during that 6 years, if you get called up to active duty, like a lot of people got called up and deployed to Iraq or deployed to Afghanistan, if you've been called up for at least 90 days, then those orders will make you eligible now for a VA loan for the rest of your life.
Cool. And so somebody who's, curious on that benefit, whether they qualify, how much they qualify for, what you encourage them, just reach out to a loan officer and get started and figure out what they do from there.
Yeah. I mean, that's obviously the first step, to reach out to a loan officer, but I'll be a little bit more specific than that. It's not, you can't just reach out to any loan officer, because I saw another stat early this year, late last year, that said that something around the numbers of, I think, like 95% of loan officers did fewer than like 3 VA loans last year. All right. So there's a kind of a small subset of people that really know what they're doing and what they're talking about with VA loans. And so make sure you're talking to somebody who actually is, I see on Facebook all the time, oh, I'm a VA expert. I'm like, and I look them up and I go, oh, really? You did 1 VA loan last year? Like, come on.
Yeah.
You're really a VA expert, or you just say that. So call somebody that actually knows what the heck they're talking about.
It's pretty wild. And so this is my public service announcement for people. Like, if you broke your arm and you have the choice of like, do I go to the doctor that's done 500 of these surgeries, or I go to the doctor that's like, does it part-time and has done 4 lifetime and only 1 in the last 12 months? Like, of course you go to the doctor who's done this surgery 500 times. But unfortunately, people like 500,000, 700, the largest financial transaction of their life by a long shot. They're like, oh yeah, my next door neighbor's cousin is a loan officer. I'm sure they can help me out.
Yeah. So the analogy I use with people, and I used to use this a lot, and somebody just reminded me of it this morning, actually. If you're a golfer and you golf 1 time a year, you're probably going to be terrible at it. And you're going to shank the ball, and it's going to be in the rough, and it's going to be in the water, and it's probably miserable for your entire foursome. It's probably miserable for the foursome behind you and the foursome behind them. And so you really make everybody's day miserable. You'll get 18 holes done, but it's going to be miserable. If you golf 3 times a week, you're probably ripping the ball down the fairway. You're hitting them straight, you're hitting them on the green, you're getting birdies, you got opportunities to score well. So that's the same thing with loans. If you've only done 1 here or there of this type of loan, there are enough nuance and there's enough differences between one loan and another loan that if you're not doing a fair number of them, you're going to be shanking the ball left and right, and people are going to be miserable. Your foursome is your buyer, your seller, and your 2 agents, right? Everybody's miserable when you're not doing your job right as a loan officer. But if you've done a lot of them, like you put a VA loan in front of me, and I guarantee you I'm ripping that ball straight down the middle of the fairway every single time.
Yep. Great loan officer like Patton. It's muscle memory. So I felt like you were talking about my golf game. You're talking about all the shanking, but that's another story.
Mine too. I spend too much time doing mortgages and not enough time golfing. So
yeah, you're doing really good on the mortgage side, not so good on the golf side. So maybe call Patton for your VA loans. Maybe don't call him to join you in your next foursome. If you're watching this live, give us a like, leave a comment, ask a question. This is going to be up on YouTube. So even if you're watching this on replay, leave a comment. I try to reply as much as possible. We've got Sherry Gade in the house. She's supporting. We appreciate you, Sherry. Both of us do, for the support. Mr. Casas watching us on Facebook, streaming on Facebook, LinkedIn, and YouTube. Joey Garessi, a buddy of mine out in Oklahoma City, who's around a lot of real estate investors. Appreciate y'all doing this. VA loans are the best someone can get for a primary residence. True story. And we didn't bring that up, but that's a good maybe misconception to speak on, Patton, is people might ask, on a VA loan, can I use this to buy an investment property? Give us a quick answer on that one.
Yeah, no, it can't be to buy an investment property. It has to be, when you purchase it, it has to be a primary residence. However, once it's been a primary residence, and now let's say you PCS from one place to another, you can turn that VA loan into a investment property, and it can stay in a VA loan for the rest of its life if you want to. You can even do interest rate reduction loans on that loan, even though it's now an investment property. You can still do the EARL down the line.
That's cool. So now I got some questions because I got you here. I might as well ask the man who knows it all. So I didn't know that. So I just learned something new already. So we're 13 minutes in. I learned something new. So you buy a house in Florida, you move to Texas, you use your VA loan again to buy another house. That VA loan that you have that's got renters in it now in Florida, you don't have to be living there when you do that, Earl, to do interest rate reduction loan for people.
Nope. As long as it's a VA loan, you can do an EARL on it, regardless if it's been turned into a rental property down the road.
Awesome. Yes. A lot of people don't know that too. Like when you get a loan and you get the best terms because it's your primary, if you move out a year later, 5 years later, 10 years later, you don't say, hey, I'm moving out. This is no longer a primary residence. Give me a higher interest rate. You get to keep that rate, whether it's a VA or conventional or FHA, however you bought it. I'm curious, Patton, because a lot of people don't understand either that veterans can use their benefit to buy more than one house. I know there's a lot that goes into like, how much would I qualify for if I could use it on a second home and whatnot, but maybe answer that. And then I want to hear like the most times you've ever seen it used.
Well, yes, you can have multiple VA loans at the same time. It starts to become a math problem. And essentially, whatever the county loan limit is, and the county loan limit right now is about $766,000. Well, it's $766,550 in most counties in the United States. Some of them are higher if you're in a high cost area, like some California counties and like Northeast, around DC, Virginia, those kinds of places. But let's say you bought a house for $250,000. That now comes off the cap. So you started out at 766 and you buy a house for 250, you still have 516 left. So you could PCS to another place and buy another property for up to 516,000 without putting a down payment down. Then let's say you buy another one for 250 and then you PCS again. You could now buy a third, because now you're down to 266. You could buy a third property for 266,000 without any down payment. Once you go over that limit, let's say you had 266 left and you wanted to buy a property for say 466. Well, that's $200,000 over that limit. And you have to put down a down payment on just 25% of what's over that limit. So it's not 25% of the whole loan. It's just what's over that limit. So you do have options, but again, it's somewhat tricky. And you got to talk to somebody who knows what they're doing when it comes to calculating your, what we call bonus entitlement.
Awesome. Yeah, that's something that people don't know. So just for a recap in my own math brain, you got a $250,000 loan in Florida. Then you do another VA loan in Texas, $250,000. So you got 266 left. You move to California. You're buying something for 466. You got 266 left, and you're putting down 25% of the 200 above. So you're putting 50,000 down and getting a loan for 416.
Unless you actually move to one of the high cost counties in California. So there's some counties, like LA County, for instance, is going to be like 1.15 million is the county loan limit. And now that's the county that matters. So if you had the 250,000, and you went to LA, Now you take the 500,000 off of 1.15, and you would actually be able to buy a house in LA for 650,000 with no down payment. So there's some nuance to that.
Sweet. Yeah. I mean, that's enough. You just got to talk to the expert. That's the bottom line with all things mortgage, especially something like VA loan, where it's got its own set of rules, its own intricate guidelines and whatnot. It only makes sense to talk to an expert, which we got some questions for you here. Joey Garessi asks, got to ask the assumption question. Do you know anyone that's completed a VA loan assumption? And is there anything funky in qualifying for a VA loan assumption?
I've actually helped people out on both sides of this, where people were looking to sell a property and let somebody assume a loan. And then I've also helped people that, were going to assume a loan. If you're going to try to assume somebody else's loan, the biggest thing is you can't go through just a normal loan officer. Like, I can't really help you. I can give you some advice, but what you have to do is you have to go directly to whoever is servicing the current mortgage. And they basically are going to set the rules and the qualifying and all that stuff. You have to go through them. If you are going to let somebody assume your loan, what I will tell anybody that will listen, stomp your feet. Like, if you're a loan officer and you're talking to one of your clients and they're letting somebody sell, or they're selling their house and letting somebody assume it, make sure that they only let a veteran assume their loan if they ever want to use their VA eligibility again. Okay. So if you let just some random civilian assume your loan, your VA eligibility will stay with that VA loan forever. And if they ever foreclose on it or something, that you've lost now that eligibility with the VA. So the only person I would ever let assume my loan on my house would be another veteran who has enough VA eligibility in order to assume my eligibility on their certificate of eligibility.
So when that veteran assumes that loan with their eligibility, now it's on their eligibility. It doesn't affect you.
That's right. Now it goes to them, but there's some paperwork involved in that. It's not like an automatic thing. That's something that you have to make sure that paperwork gets processed along with your loan assumption.
Sweet. All right. We got another question from Ryan Lundquist, who's a Sacramento legend. Anybody who hasn't checked out SacramentoAppraisalblog.com, Ryan's been doing that for as long as my oldest son's been alive. I think his blog is a few months older than my son. So 15 years doing SacramentoAppraisalblog.com with some cool stats. Should check it out, Patton. He follows the real estate market, and all the realtors in town know him as a legend for all his stats and being interviewed by newspapers and whatnot.
Sure thing.
So
I'll take a look at it.
Yeah. SacramentoAppraisalblog.com. Do we know yet how VA will view the commission in light of the NAR lawsuit?
You know what? They really haven't put anything out yet. And if you go into the VA guidelines right now, I mean, I feel like they've already said how they're going to treat it. And they basically say, look, we don't believe that a buyer agent adds anything to the transaction. I would disagree with that. But the VA says that in light of how much public information there is that's out there on houses, you can Google it and find a listing on 30 different websites. So you can really, they're saying you can search for your own house online without really having a buyer agent. Now, I think that's maybe a little bit short-sighted, especially when you start talking about an active duty person. Like I've done a number of deals recently where I've got a couple of borrowers that are in Japan or in Korea or in Germany, and they're PCSing to the States, and they have somebody walking through houses with them, doing a Facebook Live or something with them, and in order to be able to see, and answer questions and go, okay, check this out and look at this. Oh, you want to look over here again? They're doing walkthroughs of houses, and I don't know anybody that's doing that other than a great buyer agent who's very familiar with working with VA clients. So, and the biggest issue with this NAR thing is that when, before you can even show houses as a buyer agent now, you're going to have a buyer agreement that says the buyer agrees to pay you X. Well, we know that on a VA loan, the buyer is not allowed to pay for that agent. So how do you, in good conscience, as an agent, walk up to a buyer and go, okay, before I show you houses, sign this that says you're going to pay me 3% or 2% or whatever the number is, knowing that they're not going to be able to do that on a VA loan. You know, I mean, I guess it's up to the buyer agent to know that you're not going to be able to enforce that on a VA. So it just doesn't make any sense that that's how it's going to be worded. So I think some adjustments need to be made on the whole NAR thing. And I don't know if the VA is going to do it or if NAR is going to have to change how that form is going to read or what this looks like. But it's going to be interesting for sure.
Yeah, we're gonna wait and see. And I think that there's a lot of different views on what's going to change, what's going to happen. But if there's any certainty in life, it's that things change. So
yeah, and I think the biggest impact of that whole thing is going to be on veteran borrowers, though, because of the way that because of the way it's written, where a VA borrower cannot pay commission, like period. And it's not, and you can't just say, hey, I'm going to get seller concessions and it's going to be a charge to the borrower and then the seller's going to pay it through seller concessions. It can't be like that, because of the way the rules are written. It has to be the seller paying the buyer agent directly. It can't be a pass-through charge through the borrower.
Yeah. Wow. Yeah. I haven't thought about that a ton, but interesting to see what happens. Because the last thing you want is something happen that makes it harder or makes it to where, these buyers are being looked at differently because of regulation, which a lot of times, there's rules that go into place and there's unintended consequences. It would be terrible to see the unintended consequence being, VA buyers have a harder time getting offers.
And I hope it doesn't come down to that. I hope that we don't have to wait to have some actual damage to VA borrowers for the VA to make a rule change or make something happen to where this works. Hopefully we don't have to have, a class action lawsuit with a bunch of veterans going, hey, I got screwed out of the ability to use a VA loan because of these new rules. So hopefully we get this ironed out soon.
Yeah, I hope so. All right. All right. They're firing away VA questions now. So we'll see if we can get through some of these. What's the most common repair you see called out from VA appraisers?
I think it's got to be peeling paint. There are a couple things that you see regularly, and one of them is peeling paint. Another one is handrails downstairs. That's a safety concern. And rotted wood around like windowsills and around door frames and things like that. Those are the biggest things. The other thing the VA is not super big on is exposed wiring. So if you have face plates off of outlets and things like that, or in a basement or whatnot, you see wiring all over the place. They're not real big on that. So, but the most common thing is probably peeling paint. But let me throw this out there as far as VA. One of the common things I hear a lot of is that this house, it'll never pass a VA appraisal, right? So we're not going to accept a VA offer on it. But that may be kind of true, except for the fact that we have VA renovation loans that are available. And so you could literally take a house that's like, we did one once a few years ago where the house had literally burned down and it was literally 2x4s sticking up like a skeleton. It had burned down to literally nothing. And it was the lot was essentially for sale with a burned down house on it for like 50 grand. And the borrower got under contract on the lot, got a builder to come in and say, hey, I'll scrape the foundation clean and build a new house on this thing for, whatever the number was, and did a VA renovation loan and built a brand new house on top of this lot. So you can actually do a VA loan on anything through the VA renovation loan, which is pretty awesome.
That's good. Yeah. It's funny too, because I get that a lot where it's VA and FHA are like, oh my gosh, like, this thing's not going to pass. It's going to have an issue with the appraisal. I had one recently, Patton, and it was kind of funny because after talking to the agent, I said, I want to talk to the list side agent and get some more information out of him. I talked to him, and the more information I got, I said, listen, like a conventional loan isn't going to work for this thing based on the roof and the fact that you can't get a roof cert. Like, no financing will work on this loan. So instead of telling people to bring a conventional offer, like, and the funny part is no matter how much I told this agent, they didn't want to hear it. They went into contract on with a conventional deal, and I followed up. I put it in my CRM to follow up with this agent to just see, like, if by some, grace of God he got it done. Yeah, you were right. They couldn't get the deal done. So yeah, we're taking only cash offers on this thing now.
Yeah.
Peel and paint is something I'm very familiar with. Just had a FHA loan where we had to go paint a workbench in a garage. So for anybody listening, it's not just peeling paint on the house. It's the garage, a shed, anywhere peel and paint is found. They're going to want that taken care of. And it's, government loans, FHA, VA there. But, don't think that conventional loans are lending on houses that are falling down and there's crazy health and safety issues and a leaking roof and all that stuff, because that's another misconception.
That's right.
Mr. Jay Bunty, another guy who knows a thing or two about VA loans. He wants you to explain to the fine people on the interwebs what happens if a VA appraisal comes in low. Are there any options?
Yeah, so I'll tell you, I think this is one of the biggest misconceptions about VA loans, is that the appraisals are going to come in low. I would say, in the last month, just off the top of my head, I bet 40% of my VA appraisals have actually come in higher than value. And they're coming in fast too. We've had orders that went from order it on Friday and get the appraisal turned in on Tuesday or Wednesday, like super fast turns on VA appraisals. So that's kind of a nonsense thing if people say appraisals take too long and they come in low. But the VA appraisal process, I think, is actually a model that's going to be that Fannie and Freddie are going to pick up, and it's going to become something that goes out across the real estate landscape. And the first thing is that if the appraiser believes that the property might come in under the value, under the purchase price, they issue what's called a Tidewater notice. Now, don't ask me why it's Tidewater. I have no idea why they call it Tidewater. I guess it's coming in a little low. I don't know. Anyway, so they issue the Tidewater notice, and that's essentially telling the agents, hey, give us some comps. Like, hey, I'm having trouble as an appraiser getting the value that you think this property should be. Can you give me some of the comps you used in order for me to look at and kind of maybe understand what your issues are, what things you looked at to put this value on it, and maybe I'll come to the same conclusion that you did, and this house really is worth $500,000 or whatever the number is. And so that's the first thing. So we give the agents a chance to prove to the appraiser, hey, here's my value. And then the appraiser finishes up their job, and then they go, they give us the value, and let's say it's still low. Now we have the reconsideration of value process. So what we do there is we get a memo from the borrower saying, hey, I believe this house is worth, let's say, $500,000. And here are some comps, and here are the reasons why I'm perfectly willing to pay $500,000 on this house. And we send that to the VA. So that doesn't go back to the appraiser. That goes literally over the appraiser's head, and it gets one of the staff appraisers at the VA Regional Loan Center to look at the whole file and say, yeah, this property is worth this, that, whatever the number is. And I'd say pretty high percentage of those, 50% plus, once we get to that reconsideration of value process, a lot of those, the VA will actually give additional value to the property. It may not ever get to the actual purchase price, but it's going to get closer, and maybe close enough that you save that deal. So on a VA, bottom line is VA appraisal gives you two options to impact the appraised value instead of just a reconsideration of value process like you would have with a conventional or an FHA loan. And it's the only product on the planet that gives you an opportunity, gives the realtor an opportunity to impact the appraised value before the appraisal even comes out.
Yeah, I remember, admittedly, 5 years into my mortgage career probably is when I learned about, Tidewater and how that stuff works on VA loans, which is a cool little caveat that other loans don't have, right? So
yeah, people act like it's such a bad thing. Oh, Tidewater. I'm like, it's the coolest thing ever. Like,
right.
It literally gives you an opportunity as a realtor to affect the value of this house. Like, how good is that? Like everybody else, it's illegal to do that, right?
Right, right. Yeah. Imagine it's it's a cool little thing to just give a heads up and say, there might be something that's missing here. You guys, on the open market, party agreed to pay this amount. State your reasons why you think it's worth it. And we even got Ryan chiming in here, who's a appraiser who's done 1,000 appraisals probably over his lifetime. He's a fan of Tidewater. He likes the communication aspect here, which communication in real estate is huge.
Yeah, absolutely.
All right, Joey Garessi wants to know if there's any misconceptions, and then I got a whole list of commonly asked questions about VA loans.
I see it all the time. As a loan officer, as loan officers in general, I think people just forget it. If you're not in this space and you're not used to asking about VA loans, I don't think very many people even ask about it. And I've had loans referred to me because I carry a lot of licenses in a lot of states. And I've had, in my company, I've had people refer somebody and go, hey, talk to Patton. He's licensed in whatever state, Ohio or whatever. He'll take care of you. And so and the first question I asked him, hey, are you a veteran by any chance? And I remember in the last year, I had like 4 loans referred to me where they were going to move down the path of, I have to do a FHA loan. I have to do a conventional loan. I'm going to pay PMI, all this stuff. And I'm like, wait a minute, you said you're a veteran. Like, why are we not doing a VA loan? And they go, oh, I didn't even know I was eligible. And I pulled their COE, and sure enough, they are. And now I've saved them thousands and thousands of dollars over the life of their loan because they're veterans. And so I think that's the biggest thing is people have to ask. If you're a loan officer, please, 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 please ask your client if they're a veteran. Did they serve? And if they did, make sure you analyze and know what you're doing with a VA loan, and so that people can take advantage of the mortgage that they actually earned by putting their life on the line for the rest of us. So that's the one big thing is make sure you're asking. A lot of people think that the VA loan is capped. So imagine a veteran that served a long time ago, and a lot of people think that their VA loan, it used to be it only lasted for 10 years after you got out, but now it lasts forever. Once you're eligible for VA loan, you're eligible for the rest of your life. So that's one thing. Number 2 is a lot of people that are affluent don't know that the VA loan is uncapped. Like I've done VA loans to $4 million. Why would you pull your money out of an investment that may be paying you 15, 20, 30%, whatever your investment is? You've got $1 million in an investment. Why would you pull that out and put it on a down payment on a house just to avoid, 5% interest or 6% interest? You could far out earn that if you're invested, in something else potentially. So, there's no cap on a VA loan. There's no PMI on VA loans. The VA loan benefit never expires. Yes, you can have multiple VA loans open at the same time. Yes, so those are some of the biggest misconceptions that I see all the time.
Yeah, that's great advice. And when you talked about it, how you've come across it, so I know it's happening where people just don't know. Oh, there's a special loan that I could get as a veteran, and nobody asked them, and so it's scary to think about. If you think about that 13 or 16% of veterans that have used that VA, entitlement and got their VA loan, what percent have got a conventional or FHA loan because they just didn't know, which is something that, I'm sure they're out there.
Yeah, it happens. I used to see that all the time. I working in a call center, I'd see people and they'd be like, hey, we're going to do an FHA loan for this guy. And I'm like, wait a minute, he's a veteran. Like, why would we do that? An FHA loan is literally the worst loan if you qualify for a VA loan. There's literally 0 reasons that I can think of off the top of my head of a reason why you would put a qualified veteran into an FHA loan. VA loans are more lenient on all the credit stuff. Like there's literally nothing in there that would make me attracted to an FHA loan.
Yeah. Or a conventional for that sake. Like you think about a conventional loan where you're putting 3% or 5% or 10% down, you're paying mortgage insurance and a higher interest rate. If I was eligible, I'd use a VA loan all day, every day, and twice on Sundays.
Another thing I hear all the time is that VA loans take longer to close. We just got a contract last Friday for a 21-day close. I'm not the least bit concerned about it. We'll get that knocked out. Yes, the VA will could potentially take 14 days on an appraisal, but the appraiser was out there today. Like I'm not the least bit concerned. We've got the loans approved already. It's underwritten. We need title and appraisal, and we'll be ready to close. So yeah, you can absolutely close quickly.
Sweet.
There's another good question here. Next one.
Oh, what do we got? Oh, Mr. Joey Garessi. Do spouses of veterans retain VA loan benefits after the veteran passes away? My mother will be listing agent for a friend. Her veteran spouse passed away, and the house has a current VA loan.
Yeah, so the short answer is I don't know if your mother's friend will be eligible for a VA loan again, but it's pretty easy to find out. So there's one form, and off the top of my head, I don't remember what the number of it is, but it's a VA form. And it's a one-page thing, and the surviving spouse puts their name in there and their social security number, date of birth, and all that stuff, and then they have to put their spouse's social security number, date of birth, when they served, that sort of stuff. All information that they should have pretty readily. And when they died, the VA will do a quick look at it. And if the veteran died due to some sort of service-connected issue, then likely the spouse will retain VA loan benefits. So there are surviving spouse benefits, absolutely. But it depends on, if they weren't receiving, say, VA disability and, they just happened to serve for 2 years back in, the early 80s or something, they die in a car wreck, you're not probably going to have VA benefits to pass down. But if they were, if they were disabled through Agent Orange in Vietnam and, died because of Agent Orange exposure, like probably the surviving spouse. And certainly if the surviving spouse, if it's a Gold Star widow where somebody got, killed in action or something like that, they're certainly going to be eligible for a VA loan.
Yeah, that's another subset. I would imagine that, they might not always know that they have a VA benefit to use. And so surviving spouse, maybe he's got a couple kids, and what a great benefit to be able to go, buy a house with nothing down, no mortgage insurance, lower interest rate. So I think that's part of
if they are eligible as a surviving spouse, they're eligible up until they get remarried potentially down the road. So that's just something to know as well.
Okay, cool. Yeah. And what I was starting to launch into, I want to make sure before we end it, we kind of talk about your mission to educate, right? And your mission to make sure that the percent that's in the teens of veterans who have used their benefit goes up. Of those that use it, they understand resources that are out there. One thing that I know bothers you, because it bothers me, and this happens in all businesses, right? But like marketing is one thing, and the best place to get your loan is a whole nother thing. So tell us a little bit about companies that might use terms that that say that they're a veteran place, but is probably not the best place from knowledge standpoint, advice standpoint, price standpoint, and all that when it comes to VA loans. And maybe even one step before that, people think that like the VA is the one handing out the loans. They're not, right?
Yeah. I'll give you another analogy is, the VA is simply an insurance company. A VA loan at its most basic sense is the VA is simply guaranteeing 25% of the loan amount. So if you buy a house for $400,000 and then foreclose on it within, let's say, a year or whatever, a year later, the bank has to take your house back. They don't have to sell it for $400,000 to break even. They just have to sell it for $300,000 because the VA guaranteed 25% of the loan amount, which would be $100,000. So that's one reason why the VA loan is such a good deal, is because interest rate, as we know, interest rate is all about risk. The more risk there is to the lender, the higher the interest rate gets. That's why lower credit scores have a higher interest rate. That's why investment properties, it's easier to walk away from an investment property as a owner than it is to walk away from the house that me and my family live in, right? So that's all about risk to the bank. And so VA loan risk is very low, and that's why you get a lower interest rate. That's why those benefits exist. Now, as far as advertising, deep pockets I could pay to have my name on the top of every, search anything you want on Google. And if I had enough money, I could put my name on the top of that search for that keyword. Right. And so there are a lot of places that if you search a VA loan, there's the standard couple that come up at the top. Those are the people that are spending the most money to grab your attention and pull it into their ecosystem in their world. Where they get that money is to typically overcharge veterans and active duty people. And so that's kind of been a pet peeve of mine. Is I see the numbers, the total volume of people that get sucked into that ecosystem just because they don't know, and they get taken advantage of. Just because somebody says that I'm veteran friendly, or, oh, I'm partially, we're veteran owned, or we're veteran this or veteran that, or thank you for your service. That doesn't mean that they're taking the best care of you. So what I would say is just, I encourage you to shop with somebody who actually knows what they're doing. And then compare those two loan estimates and take the one that's best for you. That's a passion of mine. It's a pet peeve, I would say.
Yeah, right. Yeah. I
Places,
won't name any names since you
Sure.
were so nice about it and didn't want to, beat anybody up, but it's just, you've earned the right, to have the best loan product that's out there. But not everybody is offering it at the same rate and terms and whatnot, which I think is a misconception. I think people, sometimes with all loans, just go out there and like, everybody's got the same rate. No, there's like certain companies that run a lot bigger margins and they charge you more. They're probably forced to charge higher margins if they're spending millions on advertising and they're the top of every search.
And the VA loan, the VA does not lend a penny to anybody. The VA loan is simply money lent by me, lent by a lender. And then we send that information after closing. I mean, there's only the only subset. There's one very small subset of mortgages that the VA actually looks at and approves prior to them being funded. But for the most part, they get funded, and they're, you as a buyer, you've been living in the house for a month or two before it actually goes to the VA, and the VA says, yeah, we'll guarantee this. So the VA is simply an insurance company. They don't actually lend money, and anybody who tries to pretend that they are the VA when you call them should be immediately thrown out of your Rolodex of, I say Rolodex, but delete their contact information from your phone.
Right.
Now you're young enough, you don't even know what a Rolodex is, probably.
I know what a Rolodex is, but yeah, I'm picking up what you're laying down, right? If the first thing they're doing is lying to you about any connection, that's a sure sign to probably look elsewhere when they're lying to you from the get-go. So
yeah, right.
I'm gonna keep my promise to keep this at about 45 minutes. Before we go, any parting words, or where can people find you?
Okay, you kind of broke up there, but I think you asked for some parting words.
Oh yeah, parting words, and where can people find you?
You know what? I could tell you can find me. I mean, the email address is pgade@umortgage.com, and my cell phone number, I'll throw that out there too, is 623-866-3974. My passion is to take care of veterans. Everything I do, I wake up in the morning thinking about taking care of veterans, and I go to sleep at night. Sometimes I dream about VA loans. You laugh, but it's actually true. So, this has been kind of the calling in my life, is to really expand access for veterans, change the way that realtors look at and treat VA loans and treat our veteran buyers. That's, and then really the third part of that is to help create a organization where the loan officers aren't the ones making the mistakes. on VA loans that put our veterans in a bad spot. So it's a three-pronged educational approach. You know, we got to teach the consumer the right way to do things. We got to teach the real estate community, the realtors that are out there. We got to teach them what right looks like, and then we also have to teach loan officers how to do things right and how to know about the nuances and the specifics around VA loans that make them different and make them special. And so that's what I do. That's what I spend every day doing, and it's what gets me going, man.
I love it, man. I appreciate you. I'm sure veterans across this country appreciate you for everything you're doing. So thanks again for your time, man.
Thanks for having me, Matt. Appreciate you.